Something extraordinary just happened in the global markets. Something so rare, so powerful, that it hasn't occurred in over 40 years, and almost no one is paying attention. As we close the books on 2025, silver has officially done the unthinkable. It has surged past the price of oil. Let that sink in. Silver, more expensive than oil. A metal once dismissed as boring, slow, and secondary has just crossed a historic threshold. And that is not a coincidence. It's a warning. While Wall Street has been hypnotized by the AI everything narrative, silver has been moving quietly, and then suddenly, violently. This weekend, silver blasted through all-time highs, breaking above $79 an ounce. Not on hype, not on retail frenzy, but on something far more dangerous, shortage. When a market rises because there isn't enough supply, that's not a rally. That's a squeeze. And this one is just getting started. Even Elon Musk has broken his silence. The man behind Tesla, SpaceX, and Starlink, industries that consume enormous amounts of silver, publicly admitted, this is not good. Silver is needed in many industrial processes. When the world's most influential industrialist says a silver price surge is not good, you're no longer dealing with speculation, you're dealing with a supply crisis. Silver isn't just a shiny rock. It's embedded in electric vehicles, solar panels, semiconductors, defense systems, satellites, medical equipment, AI infrastructure. This is the metal that powers the modern world, and the world is running out of it. Now, here's where most people get it wrong. They look at record highs and assume they're late. They think the opportunity has passed, but history tells us the opposite. Because when silver moves like this, it doesn't stop gently. It doesn't top quietly. It explodes. To understand what's coming next, we have to go back to 1980, to a moment that still haunts the silver market to this day, the Hunt brothers. Two Texas oil billionaires who attempted to corner the global silver market. They didn't speculate. They demanded physical delivery. If they drained supply, and they drove silver from $6 to nearly $50 an ounce in months, the reason the squeeze worked wasn't money, it was control of physical metal. Paper contracts collapsed when they couldn't be honored. Sound familiar? But here's the twist. The Hunt brothers of 2026 aren't two individuals. They're entire nations. China, European central banks, the global solar industry. Russia has already made its move. They quietly allocated over $500 million into silver reserves in their 2025 to 2027 budget. Not gold, silver. Europe is trapped. Basel III banking regulations are forcing banks to replace unallocated paper silver with real physical bars. For decades, banks got away with promises. Now they need ounces, and there aren't enough. The United States and the European Union have officially designated silver as a strategic mineral. That's not symbolic, that's an admission. Silver is now a national security asset, and there are only about 22,000 tons left in London vaults. That's the stockpile the world is fighting over. The smart money already knows this. They're not just buying gold anymore. They're cornering silver before the door slams shut, because China controls the choke point. While Mexico mines more silver, China refines and distributes nearly 70% of the world's supply, and consumes roughly 80% of the silver needed for the global solar revolution. That's dominance. On January 1st, China's export restrictions come into effect, and before the ban even begins, they're already paying $8 to $10 above spot just to keep silver inside their borders. They're hoarding. They're preparing. They're executing checkmate. The West is about to discover that much of the silver it believed was sitting safely in vaults has already been promised, or shipped, or consumed. And this is where everything accelerates, because three massive forces are colliding at the same time. First, the China export ban. The single most important artery of global silver supply is being cut. When that happens, physical markets don't adjust slowly, they seize. Second, European banks scrambling under Basel III. When banks are forced to turn paper into metal, demand becomes urgent. Price becomes secondary. Availability becomes everything. And third, the Federal Reserve has effectively waved the white flag. Interest rates are falling. The dollar is weakening. The DXY has slipped below 100. When the opportunity cost of holding silver disappears, silver doesn't climb. It stampedes. This is why $200 silver isn't speculation, it's math. And here's something most people aren't prepared for. This move isn't happening in isolation. It's happening alongside one of the most dangerous market setups in history. The S&P 500 is trading at a Shiller-Cape ratio above 39. That level has only been reached twice before. In 2000, AI stocks have gone vertical. Valuations have disconnected from reality. And when liquidity tightens, gravity always returns. If a flash crash hits tech, and history suggests it will, everything gets sold initially, including silver. That moment, that panic, that forced liquidation, that is the opportunity of a lifetime. Because when the dust settles, money doesn't flee to cash, it flees to hard assets. Silver doesn't just recover, it launches. And that's exactly how you prepare for what's coming next. Now let's talk about positioning. Because knowing what is happening means nothing if you don't know how to survive it and potentially thrive inside it. Silver is not a polite asset. It is volatile. It is emotional. It is ruthless. And it has a long history of punishing anyone who treats it casually. This is not a market for the faint of heart. This is a market for people who understand asymmetry. When silver moves, it doesn't grind higher like bonds. It doesn't drift like blue chip stocks. It rips and it crashes. And then it rips again. That's why smart capital doesn't chase green candles. It waits for fear. It waits for liquidation. It waits for moments when everything feels broken. Remember this. In every historic silver bull market, the most violent sell-offs happened inside the uptrend. Those drops weren't the end. They were the fuel. So if we get a year-end flash crash, if tech unwinds, if margin calls force silver down 10% in a single day, that isn't weakness. That's opportunity knocking with a battering ram. This is how seasoned operators build silver exposure. Not emotionally, not impulsively, but deliberately. The real strategy here isn't guessing the next $5 move. It's owning assets that benefit from scarcity. Assets that don't depend on paper promises. Assets that survive monetary resets. Because, make no mistake, the silver squeeze isn't just about price. It's about trust. Trust in paper contracts. Trust in ETFs. Trust in settlement systems. Trust in financial plumbing that was never designed for real shortages. That's why physical silver matters. That's why fully allocated vehicles matter. That's why royalties and streaming companies matter. Because they don't rely on leverage the same way miners do. They don't dig holes, they collect ounces. Some structures benefit when prices rise. Others benefit when supply disappears. The best setups benefit from both. And that's the theme of this entire moment. Scarcity. For decades, silver was treated as infinite. Something you could short endlessly, something you could lease, rehypothecate, paper over. That illusion is ending. The moment China locks its exports, the moment European banks demand bars instead of balance sheet entries, the moment industrial buyers panic because production lines can't stop, silver stops behaving like a commodity and starts behaving like money again. That's why gold is moving too. Gold is the signal. Silver is the amplifier. When gold breaks all-time highs during periods of monetary stress, it tells you something is wrong. When silver follows and then outruns gold, it tells you the system is cracking. And cracks don't get repaired with press releases. They get exposed. Now here's the uncomfortable part. Silver will scare you. It will test your conviction. It will drop when you least expect it. It will spike when you think it's over. Banks are already floating psychological ceilings. $100 is resistance. Silver will cool off. This move is overextended. That's not analysis. That's conditioning. The same institutions that suppressed silver for decades are now trying to manage expectations as they reposition. Because when silver truly breaks free, there is no orderly exit. There is no gradual repricing. There's a scramble. And once industrial users are forced to compete with investors for the same shrinking pool of metal, price becomes irrelevant. Only availability matters. This is why $200 silver isn't extreme, it's conservative. In real terms, adjusted for inflation, silver's 1980 high was over $180. And that was without solar demand, EV demand, AI infrastructure, strategic mineral status, a weaponized supply chain, or a fractured monetary system. This time isn't T identical, it's worse. And that's why volatility isn't the enemy. Complacency is. Silver doesn't care about your timeline. It doesn't care about your comfort. It only responds to pressure. And pressure is building everywhere. Debt, currencies, geopolitics, energy, supply chains. This is a metal sitting at the intersection of monetary fear and industrial necessity. There is no substitute. There is no workaround. There is no easy fix. Eventually the market has to reconcile fantasy with reality, paper with metal, promises with ounces. When that reconciliation happens, it will not be subtle. The bulls are already out of the barn. They might stumble. They might knock things over. But they are not going back inside. So if you're watching silver right now and wondering if this is the top, ask yourself a better question. What happens when the world realizes there isn't enough silver to keep the lights on? What happens when nations treat ounces like oil? What happens when confidence breaks? Because when that happens, price is no longer the story. Ownership is. This is not financial advice. This is market reality. Silver has crossed a line. Oil is behind it. History is behind it. And the next chapter will not be written quietly. Strap in, hold tight, and don't confuse volatility with weakness, because this isn't the end of the silver story. This is the beginning.